Because Saudi Arabia and Russia are cutting oil production, the global market price has risen. Oil prices rose after the world's biggest exporters, Saudi Arabia and Russia, increased cuts on Monday despite concerns about a global economic slowdown and optimism that the Fed would raise. The Organization of the Petroleum Exporting Countries, OPEC, and its Russian-led allies OPEC Plus have slashed supply since November to further support weak China and oil prices than the United States. But now it could not bring it at $70 to $80 per barrel. Saudi Arabia said it would extend its voluntary decision to cut 1 million barrels per day, including August, for another month, adding that the cuts could be extended for the following months. Shortly after Saudi Arabia's announcement, Russian Deputy Prime Minister Alexander Novak said that Moscow will reduce its oil exports by 500,000 barrels a day in August. The cut represents 1.5% of global supply, bringing the total cut by OPEC Plus to 5%. 16 million barrels a day. Late Monday, Algeria said it would cut oil production by 20,000 barrels from August 1st to 31st to support efforts by Saudi Arabia and Russia to stabilize the economy. It is said that in addition to the 48,000-barrel cut in the April decision a production decision will be taken. Libyan Oil Minister Mohammed Aoun said that Libya welcomes Saudi Arabia's decision that will have a positive impact on the balance of trade between international producers, consumers, and international trade. OPEC Plus, which accounts for around 40% of global oil production, has already cut 3.66 million barrels per day. This is equivalent to 3.6% of global demand, including the agreed 2 million barrels per day for the year. The final and voluntary cut of 1.66 million barrels was approved and extended until December 2024. Brent crude oil futures hold at zero. Oil was up 6% or 43 cents, from $75.84 a barrel to as high as $11:52 Eastern Time, 16:52 GMT. Southwest Texas Intermediate crude rose 0.6%, or 39 cents, to $71.03. Brent crude is at zero in Friday trading. 8% and WTI rose 1.1%. OPEC de facto leader Saudi Arabia promised to cut production in July, as the group formed more OPEC Plus deals to support falling oil prices and limit supply until 2024. Saudi state news agency SPA quoted the Ministry of Energy. By August 2023, Saudi output will be about 9 million per day. Efforts by OPEC Plus countries to promote stability and balance in the oil market. Russia, the world's second-largest oil exporter after Saudi Arabia, has pledged to cut production by 500,000 barrels a day from March to the end of the year to 9.5 million barrels per day. Russian Deputy Prime Minister Alexander Novak said that Russia will voluntarily reduce production by 500,000 barrels per day by reducing exports in August. Russia will drop at this price by deepening the same-size decision it took from Moscow in March, Reuters reported, quoting Novak's office. The announcement resulted in a 0% increase in the price of world oil benchmark Brent crude oil. oil prices were trading at $76 a barrel, up 7% at 7:15 a.m. And U.S. benchmark WTI rose 0.8% for $71. Oil prices fell more than 40% in March after Russia's all-out attack on Ukraine hit a 14-year high in March. According to the International Monetary Fund, Brent crude oil needs to be around $81 per barrel to balance Saudi Arabia's budget. After announcing its first budget announcement in almost a decade in 2022, the country ran into a budget deficit this year. Gulf countries announced the first cut of 1 million barrels after the meeting in June of the Organization of Exporting Countries, OPEC, Russia, and other members of the OPEC Plus alliance. The additional decision aims to strengthen the defense of the OPEC Plus countries to support the stability of the oil market, the Saudi news agency said on Monday at the Ministry of Energy. At the meeting in June, Riyadh also said that the production cut of 500,000 units per day, first announced in April, will continue until the end of next year. As a result, the production cuts will reduce Saudi Arabia's total oil production to 9 million barrels per day. Other OPEC Plus members have pledged to cut production by the end of 2024 amid a shock to global demand and expectations of a strong aftermarket spill. Some locations in China seem rare. Economic activity in the world's second-largest economy surged last month, and some companies laid off workers as sales fell short of expectations. About 12 months of optimal manufacturing activity fell to an 8-month low in June, as some companies worry about the economic downturn, S&P Global analysts wrote in the letter on Monday. Travel will increase even as oil demand expectations rise in the coming months. For example, American Airlines passenger numbers hit an all-time high during the national holiday on Friday. But while there were concerns about economic weakness in the US and Europe, China's recovery from COVID-19 restrictions has not been as strong as many had hoped. Saudi Arabia needs high oil revenues to benefit from development projects aimed at diversifying the economy, while Russia needs more money to pay for its war actions against Ukraine. Western sanctions mean Moscow has to sell oil at discounted prices to countries like China and India. Export revenue is expected to fall to $13.3 billion, down 36% from a year ago from $1.4 billion in May, the International Energy Agency said in a report released last month. Russia's production in August will decrease by 1 million barrels per day with the previous production cuts. But Rystad Energy said it only slashed 400,000 BPD in May, instead of the 500,000 BPD Moscow had committed in June.